Now we'll start cash flow statement. Before I start this chapter, you must know the meaning of cash flow statement. There are three words: cash, flow, statement. You know the meaning of cash? And flow means it can be inflow, it can be outflow. So cash flow statement means this is the statement which records the flows of the cash. Flow of the cash means incoming and outgoing. So any statement which shows the flows of cash will be called cash flow statement. So these flows of cash can be of two types. Either it will be inflow or it will be outflow. Inflow of cash means incoming of cash in the firm or company. Outflow of cash means outgoing of cash from the company. Or in other words, I can say this is the statement of receipts and payments, because receipts are also inflow of cash and payments are outflow of cash. Now the thing is, then what is the difference between cash book and cash flow statement? You have already learned the cash book. You know, on debit side, we record all the receipts, and on credit side, we record all the payments. Then what's the difference between cash flow statement and cash book? Yes, I will let you know what's the difference between that. Before I start the difference between cash book and cash flow statement, you must know the similarities between them. I mean to say cash book and cash flow statement. Number one, both are made for a particular period. Generally, it is always 12 months. And number two, both statement, whether it's cash book or cash flow statement, they contain only cash transaction. They don't contain non-cash transactions. Actually, the difference between cash book and cash flow statement is that cash book contains all the transactions date-wise, each and every transactions. But cash flow statement, in this statement, all these transactions, I mean to say cash transactions, whether they are receipts or payments, they are grouped in different activities. Just like cash flow statement, roughly speaking, it is the compressed cash book. Recently I told you that in cash flow statement, all the transactions are grouped into three activities. Number one, operating activities. Number two, investing activities. Number three, financial activities. Means whether it's receipt or payment, all these receipts and payments of the business, they fall in one of them. It will be operating activity or investing activity or financial activity. Now the thing is, what is the meaning of cash? In literary sense, all hard cash, I mean to say notes and coins, they are called cash. But nowadays, in the modern world, in our businesses, cash doesn't mean notes and coins. It also includes bank balance, etc. And moreover, we also include cash equivalent. Now it's a new thing for you. Cash equivalent. What is the meaning of cash equivalent? Cash equivalent means all the marketable investments are called cash equivalents. It means you have invested money somewhere, means any investment that can be sold at any moment without any significant loss, that investment will be called cash equivalent. So in cash flow statement, basically there is no difference between cash and cash equivalents. Again, cash means hard cash, means notes, coins, deposits in the bank, and any demand deposits. Demand deposits means you have invested money somewhere and it can be taken at any moment. That's called demand deposit. This is just like cash. And sometimes some companies, they invest the surplus cash somewhere else. I mean to say somewhere else outside. If they are marketable, means if they can be sold or converted into cash at any time without any significant loss, they are called cash equivalent. So whenever we use the word cash in cash flow statement, it means we include all the things, cash as well as bank deposits, demand deposits, as well as marketable investments. I mean to say cash equivalents. One thing more, if there is any activity which records the movement between cash and cash equivalent, that is not recorded anywhere in cash flow statement. However, this thing is recorded in the cash book. If you sell the investments, I mean to say marketable investments, which are also called cash equivalent, you have to record this transaction in your cash book. However, what you have done, you have sold the investment and you have got hard cash. So you will write down on the receipt side of the cash book, I mean to say debit side, to marketable investments. But this type of transactions, I mean to say the movement between cash and cash equivalent, is not recorded anywhere in cash flow statement. Now, you must be thinking about this thing, that what's the use of making cash flow statement? If everything is recorded in the cash book, I mean to say every receipt and every payment can be found in the cash book, then what is the use of making cash flow statement? Actually, cash flow statement is a very good tool to handle the cash management. I mean to say so many important decisions are taken by the management only on the basis of analysis of cash flow statement. Because cash flow statement doesn't record all the transactions. All transactions are grouped in one particular activity. So the management can find out or can calculate that how to manage the cash. But on the basis of cash book, it is almost impossible to take the decisions that where the money is coming from and where the money is going to.